Welcome to 22107 Accounting for Business Decisions A. This is a screencast tutorial on the accounting equation. The basic accounting equation is made up of three categories: assets, liabilities, and shareholders' equity. The figures for these can be found in the statement of financial position. Assets are things the company owns which can have future economic value. Accounts include cash, land and buildings, equipment, inventory, supplies, and many more. An increase in an asset is called a debit, and a decrease is a credit. When recording transactions, debits are always on the left, and credits on the right, for all categories. Liabilities are things the company owes to others. They include accounts payable, accrued expenses, taxes, and many more. An increase in a liability is a credit, while a decrease is a debit, the opposite of an asset. Once again, debits are on the left, credits on the right. The final category is shareholders or owners' equity. This is what is left of the assets after the liabilities have been deducted. The two accounts in shareholders' equity are contributed capital and retained earnings. Shareholders' equity is recorded in much the same way as liabilities, with debits as a decrease on the left and credits as an increase on the right. And there you have the basic accounting equation. Now for the tricky part. Shareholders' equity is made up of retained earnings and contributed capital. Retained earnings is made up of two parts: dividends and net profit. Dividends are typically a debit or decrease in retained earnings, while net profit is typically a credit or increase. Net profit is then made up of two parts itself: revenues and expenses. Revenues are amounts received or to be received from customers for sales of goods and services. Examples of revenue accounts include sales revenue, fee revenue, interest revenue, and rent revenue. Expenses are amounts that have been or will be paid later for costs incurred while earning revenue. Examples of expense accounts include the cost of goods sold, wages expense, interest expense, and many more. The figures for net profit can be found in the statement of comprehensive income. Now let's add revenues and expenses to the basic accounting equation. To record revenues is the same as recording liabilities or shareholders' equity. Recording expenses is the same as recording assets. So if we now add expenses to both sides, we get the accounting equation in full, with a little algebra. And now the recording process becomes much simpler. This is the end of the screencast tutorial. We hope you found it informative and enjoyable.